Hey, good morning. This is Bob with Trade Genius. I want to let me just fix the drawing tool real quick. I want to just talk about natural gas here a little bit, and um, you know, my view is that natural gas is gonna go much higher, and but I've been very wrong here for the last, I don't know, 8 or 10 days. There's just been a persistent seller in the market, and I'm searching high and wide for the reason and the rationale. The On the fundamental standpoint, is storage is being sucked out of the system. The LNG terminals are being built, and that gas is going to be arbitraged to Europe and Asia because they're getting twice, almost three times the price now than you get in the U.S. for natural gas, and the production isn't really warranting a basically almost a 30% drop in natural gas prices in a month. So, there's only a couple other scenarios out here. One is that somebody knows that there's some really great production coming. Somebody's guessing that the demand into January, February, March is going to be benign, or there's tax loss selling going on that people are basically, Nat Gas hasn't been a big winner and people are taking their costs out, and or a hedge fund is blowing up somewhere, and somebody's just liquidating their position. But be that as it may, it's going down, and I'm in it, and and Friday I actually added to my position cold. I said I'd be swapping out of my UGAS and into KOLD. Officially, for those who were following my signals, we got out at 8, and but unofficially, I'm bullish on natural gas, and I've been day trading to get my costs down, and so my position is I have January cold, 38 strike puts. You got to realize, because it's a triple, that if natural gas prices just go up 10%, you'll see you would see cold at 33, 40, $34 that fast. And you could see that you can get these kind of moves in natural gas. I mean, look at this move here, from 280 to 320, 40-cent move in a week. So when this decides to blow higher, and it will at some point, you'll do really well. So how I'm playing it now is, and if you're stuck in UGAS, is that if Monday's an up day, you might want to set some stops, or you might want to just sell and roll into KOLD puts. You have your risk defined in case they decide to grind this thing down. And here are the scenarios, in my view, is that we have a falling wedge right now. We're at the point where it should turn, or should collapse. And so if it turns above here, in this area, this black line here was 3 days in a row, we were flat closes. And that was giving me hope that maybe we were done here. And then they just Friday, they popped it, probably just to get people to bite on this break of the trend line, and then they just shorted the hell out of it, all the way down to this new bottom line here for the wedge. And so if we push back up, we're going to have to convincingly push back into the value area here, and get above 269. And if we fall, we collapse down, here's two areas of support. Here's 254, which is a 161% off of this fib. Or this green line here, you see this green, purple, and red. This is a 1-year volatility channel. That means volatility against the mean here of volume and price. And we call it the magic channel. And they may take a stab at it down to here. I don't want to be in UGAS, overnight if it's going to drop it from here to here, because that'll take UGAS from 5 something into the 4s, and so not interested in that. So that's why I define my risk with KOLD. If we break 269, I will then double my KOLD position. If we collapse, then I'll just wait it out, and I'll roll to February. At some point here very soon, they're going to have to start injecting these storage systems again, and the weather reports are not favorable to people bearish on natural gas. So this it's definitely a game of chicken going on. But that's how I'm going to play it. So either we're going to get a break up of the wedge. If we do, then we can look for 294, 295 as the measured move, and that ironically is the point of control for the entire year. This is where the most volume was transacted at this price. Okay, if we break down, then then we're looking at 254 and then 248, and this should hold. This is a very, very, very strong support area. And then I don't even want to contemplate if it breaks from there, because it can go down to 212. So it could be pretty disorderly. So that's why I want to just have puts in there. I mean, right now they're pretty cheap. It costs you $1, and you can easily probably get a 4 or 5 bagger on it if it goes our way, and and then if it just keeps tumbling, then it's just going to make that next uprise even more spectacular. So that's how I'm playing it, and I'm day trading it, and I'm not holding positioned overnight. If I make money, I make money. If I lose money that day, I lose money. But that's how I'm trying to pay for my my KOLD puts. Okay, you guys have a good one, and we'll see how we open Sunday, and then see if we can get a change in direction on Natty. In 8 days, they have to roll the contract to February, so we may see a reversal here as these guys have to buy back any short positions they have in January contract to roll into February. And who knows if today, Friday, was basically they're just taking contracts off the books. Maybe the market makers were taking them out, and we won't know that till the next COT report we'll see next Wednesday. Anyway, Bob from Trade Genius. I think this is a great opportunity. Just you're absorbing some pain right now, but natural gas will reward us on the long side here pretty soon. Thanks. Bye.